Hey guys, it's Sunday, March the 17th of 2024, and I want to go over natural gas weekly forecast. Without any further delay, let's get into it. So far, nat gas has made a low on February 1920. Around here, it looks like it's starting to grind higher. If you ask me, maybe it looks like a 1, 2, and maybe working on a wave 3, as long as we don't take out that low, which is 152 or 155 to some. You can see that commercial stalled on the 19th and has been hedging while nat gas goes higher, and large speculators did the same thing, and you can see that they're buying and building a position going long. I would like to see in the next couple of weeks commercial take out this low of January 15 of 39ish, and large speculators take out that high of January 15 of around minus 56,508 to do maybe a 1, 2, and work your way up into a wave 3. This is a seasonality chart I like to look at using a 5-year. You can see that March is low, indicating if there's a possibility that the February 1920 low of 152, 155 is not it. This could probably tell you that there maybe there's one more low to come in and before it starts, turning around and going higher. But if that's not the case and February 1920 is our low, you can see that it's reflecting here. It gets a little stronger in March, and then April is the strongest. Using the 15-year, you can see that February is still weak, March is a little stronger, and April is the strongest. And then going to the max of its 20 years, you can see that February is a little weak, and March is towards the 50%, and April is the strongest, indicating that maybe February 20th low could probably be it. And it can start turning around higher here. Using spectrum cycle analysis shows that right here, there's like a low on this, dominant cycle, which I believe is like the 26th, and that starts going up all the way to the 29th, and then it goes back down. Now, if you use, and that's a fractal smaller, if you use the 228 on the weekly, using a data set of 20 years, you can see that there is a trough coming around April 8th, April 15th. So I want to see if maybe this is going to be bottoming out here and going higher. So the seasonality is indicating some strong April price action, but we're already in March, and I don't know if we're going to skyrocket that quick, but you never know. But I could kind of see these, kind of grinding sideways to higher. Looking at this one and then looking at this one, there's possibly maybe a turning point coming ahead. So we got to see how this is going to play out on the weekly chart. Let's look at the daily to see what the daily's telling us there. So looking at the daily chart using 5-year data set, you can see that the fractal, which is 76, is just hitting a bottom somewhere around March the 20th, around there. And then this cycle starts going up until April 27th. And that's a little more of a fractal. If we put the, 257, you can see right here that we hit a trough on March 4th, 5th, and now this cycle is starting going up. So a couple of things to digest. The seasonality shows April is strong over here on the weekly, and on the dailies indicating kind of like a bottom trough, and then things starts going up. So that's what the data set is telling us. But so far this week, it's going to start looking a little more interesting in regards to price action. So I'm betting maybe we might get some higher prices coming in this week and maybe even next week. Here's another seasonality chart I like to look at. As we know, February 19th, 20th is our low. Using a 5-year average, you can see that from here on the 18th, which will be Monday, it got a nice little bump, pulls back to 21st. And it kind of goes sideways from the 22nd to the 25th, pulls back on the 27th, and then kind of grinds sideways to higher. Using our 10-year, you can see it kind of goes sideways, still gets this bump on the 18th, pulls back sideways to March 21st, and then another leg higher to the 26th, and then it kind of pulls back from there. And using the 15-year, you can see that on 15-year average, the 15th, it starts just grinding sideways to higher all the way to the 26th, and then it kind of goes sideways. So looking at all of these, it looks like from here, things could start building slowly, but grinding slightly sideways to higher, going, upwards. Using our master chart, using our spectrum analyzer there, using the RPO setting, you can see that the blue line was indicating a possible bottom here around February, and that kind of played out. And then I had another one just in case it was in this one, it would be in March. And so far it looks like it's just now a pullback. So both of these cycles are projecting, higher. Using the PC cycle, it pulled back from here on the second. Now we have a low around here, then it projects higher onto the 22nd, maybe pullbacks to sideways on the 27th, and then it pushes higher there. Using our annual cycle, you see that there's a pullback here, and then from the 18th on, it looks like prices continue to grind higher. Using the neural net computer, it's just pretty much a parabolic move. A turning point right here around the 14-15, and then another leg higher all the way to the April 26th. And the Bradley model is indicating something around here, which is the 15, and then another turning point around the 30th. And lastly, looking at our Fourier, you can see that we had a crossover somewhere around the 12, around there. So let's see if this is just a head fake, and then it starts grinding and pushing higher. This is a seasonality chart I like to look at in the master chart. So this is the annual. You can see that it pulls back around the 20th, and then it starts going higher. Using a fast annual, which is 3 years, there's a pullback somewhere around here on the 15, and it starts going higher. This is a 6-year mid-annual. You see that from around here, the 15-16, it starts grinding higher. And then the annual and decimal, you see that there's a bottom or swing low around the 19th, and then it starts grinding higher. Using one of Gann's techniques of using a 20-year, you can see that from here, the 28th, it starts then pushing higher. And using a 10-year, a go price action, you see that the one around the 23rd, and then around the 31st is like a double bottom, and then it kind of pushes higher. So when you add all these together, it looks like there's a possible turning point coming within the next couple of weeks. Look at on our scale chart, you can see that we feel the 60 degree, and we're kind of just floating below it, so that's not too good. Looking at our Gann square from these two swing points, you can see that on the midpoint of this is going to be the 330, March the 30th. So you want to keep an eye on that for maybe if it goes sideways, for maybe a turning point here. Also, looking at the ellipse, is not looking too good. We just cracked it, so now we're kind of below it. We need to regain that. And lastly, you want to keep an eye on April the 7th or the 8th from these two swing points recently. And we know that there's a solar eclipse happening on the U.S., so it's going to be interesting. April the 8th. If you look it up on YouTube, you can see all the different views. Especially the Christian view is very, very interesting. Nonetheless, but just keep an eye on April the 8th for some kind of event or a trigger. Using this high of the 1002, August 23 of 2022, you can see that this is the 1/2 here, and you can see that price action has been having a tough time trying to stay above that. So let's see if we could probably get above it in this month or maybe next month, so we can start pushing higher to at least test this 1/1, which is the 45 degree. Okay, so this is my Elliott wave count, and there's a couple of things here to digest. One is that the Stokes are negative, and there's two alternative counts on the daily chart. I have one indicates that this is a wave 5, and then I have another count that says this is a wave 3. So it's an A, B, C. We didn't really fulfill the wave 4 because it's not showing that yet, but then there's this pullback. So if there's a wave 5 coming, I mean, it's ugly. It's projecting a wave 5 all the way down here. And I don't know if that's going to play out. We're down to like, 0 and 25 cents. So I don't know if that's going to play out. But, if it does play out to the short side, this is for the bears. You have a target of pretty much 149 all the way to I can't even see. Wait a minute. 149 all the way to $1.45, which kind of makes sense if there's going to be one more leg lower into March. Now, for possible turning points, keep an eye on the 22nd. Keep an eye out for the April 3rd. And the ellipse techniques indicate, volatility increasing on the 20th, and maybe for this Monday opening, and on the 21st. And these are targets to the upside if it starts going higher, anywhere between $2 and $1.98. Other than that, that's pretty much it. Wave 5 count here, and then a wave 3, and let's see if it's going to push lower. These are your targets, and if it's going to push higher, this is where you're probably going to find some resistance. These are other charts I like to watch. You can see the Dewey cycle average has bottomed out around the May 8th? Yeah, and now this is starting to go up, but prices has been going down. The advanced Gann swings are still negative. It turned positive here, but now it's negative. These Dewey cycles are up, and this is the average. These are mirror cycles, and these are up. And from these different swing points, they're still positive, but price action has been continuing to push, grinding sideways to lower. And right here, we have a delta 4-month possible turning point, which is the 25th around there. So let's see how things are going to pan out. I don't know if we're just going to grind sideways to lower here, capitulate, turn. I'm not too sure, but the data is mixed. There's a lot of pros, there's a lot of cons, and I'm just showing you kind of the different views of what all the data is showing. So this is the last video clip. I'm going to go over the key levels using the midpoint, but before I do that, let's look at our statistical calendar. As you can see, Monday trading day is bullish, trading day for Tuesday is bearish, Wednesday is kind of flat, and Thursday is bullish, and Friday is bullish. So out of all these days right here, this is the bearish day. Everything else so far is bullish. Now looking at weekdays are all the Mondays, Tuesday, Wednesday, Thursday, Fridays. You can see that Monday is bearish, but kind of flat. There's not that much movement. Wednesday is a very strong day in regards to weekday. Tuesday is like the strongest bullish day. Wednesday on the weekday is bearish, and then Thursday is bearish, and then Friday is bearish. In regards to making the most money, in regards to the directional, and it's all dealing with probability, so nothing is guaranteed. This is not the holy grail. It's just kind of letting you know statistically what has happened in the past. This Monday coming up is very bullish. I give it $4 signs. And then Tuesday is bearish, but not by much, only $2 signs. So just in case it plays out and we get a nice explosion to the upside, it's logical for Tuesday the bears come in and retrace and push it lower. And then Wednesday is, I didn't put a dollar sign because there's not that much movement there in regards to, the making money there. But Thursday, you'll make money to the upside, and Friday. So that way it has $3 signs, but this is the strongest. So I don't know what's going to happen statistically on the 18th, but let's see how it's going to play out. But this is the strongest bullish day for the week. And then these two come in second. In regards to the trading day, you already know this is the weakest, and everything else is positive. Average return by week is negative, 0.2882%, 0.2882%. And the average return by the month is kind of flat, so nothing really moving there. And happy St. Patrick's to all the Irish folks. Happy St. Patrick's. So let's go into the statistical calendar. As you can see, this is a key level to watch, that 176. If we could break above that, your next target would be 184. And so far, we're having a tough time closing above 168. So this will have to be, you have to close up here, at least to get here. And if you hold here, this will be your big target. And obviously your bigger target here will be that 194. And what's that high over here? 201 pretty much. So this is the bigger picture here. And Friday expiration, there was one here on the 16th, and there's one here. And notice that on the expirations, we got another higher high, like in an angle. I don't know if this is the game they're playing, accumulating it, letting it drop, accumulating it to do a next leg higher. We'll see. Keep an eye on the March the 22nd. That's the halfway point from this February 20 low. And looking for the week. This covers the whole week. This is your midpoint. So this is the battle zone right here, $1.74. We could get above that. Targets to the upside will be 184, 189, all the way to 194. That 194 keeps coming up again. That's the April 14 low. So those are your key levels. Targets to the upside. If it gets up there, I'll probably lock in profit, especially if you're coming in from here, betting that it's going to get that high. Now, we can close above 174 for whatever reason, and the bears are in control for this week coming up. Your targets to the downside will be 164, 159, all the way to 154 for the week. And looking at for Mondays, you got to at least be above 171 and above the VWAP, because the statistical calendar says Monday, Sunday night Monday is going to be an explosion. So at least you want to be above 171 and consider going long. If you ask me, that's what I would do. And definitely above the VWAP. And if that happens, targets to the upside is $1.77, $1.81, all the way to $1.84. But just in case the bears want to swing their paws out there, and they want to push it lower and trap us, then $1.65 all the way to $1.61 and $1.58. And lastly, the square of 9. So this is where we're kind of hovering here. Worst case scenario, I've been thinking about this, just in case there is a final flush in March. Let's just say hypothetically, if they're going to like really tank it, capitulation before it pops, this is the area I would think where the bottom will come in. This is just me speculating. 143 all the way to 142, 144. That's the June 25th low of 2020. At 144, they might probably push it a little. 143. You got that 194 low of April 14. You got that 143 right below it, 142. And then somewhere around here, you got that 363 high of October the 27th. And if you do a straight shot angle here, you lean right into 143. So this is worst case scenario. If it ever gets down there and goes down here, I'm buying with my eyes closed if it ever gets down here. So I'm just kind of giving you a heads up. I'm not even going to think about it. I'm just going to be like, all right, buy a contract and see what happens. What's the worst case scenario? That it's going to push lower? $1.33, $1.39, $1.27 net gas? Really? Wow. I can't see it somewhere around here, but you never know. But here, it's been here, and you just never know. So I'm just kind of putting it out there just for whoever's interested. But let's see if we could get out of this $1.64, 63 area and push into 176 and regain 183. And then if we could kind of go sideways between here, then we got a fighting chance to put to 197 and maybe test this $2 and $2.01 cents around here. So I'll leave it like that. I give you a lot of information. I know it's a lot, paralysis, analysis, whatever they call it, but you could make a good educated guess and be like, okay, this is my game plan for this week. Let's see how it plays out. I got my game plan, and let's hope for the best, and let's see how it happens. I'm going to sign out. Hopefully you like this video, and I'll keep you posted on my thoughts on that gas.